Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Looking at SPY on the daily and weekly time frame, big time pullback today, and we had a little bit of a heads up on the MACD. We had a bearish MACD cross while the markets kept hitting higher highs. So that should be a little bit of a lesson there, an early indication of that MACD. And we saw the big pullback today. Once 215.75 broke, that was a clear bearish signal. We had that triple bottom with lows 3 times in the past 2 weeks. So that break had us looking for some downside. Here's a look at the 5-minute chart, and once that dump started happening, we saw the exponential moving average resistances on the 5-minute chart reject the price time and time again. Can't remember the last time I saw an hour and a half on SPY with those the exponential moving averages rejecting the price. So we knew that for a bounce to be real, that we needed those levels to become support, and we saw a short-term bounce play out and did hold that low before a new dump, a tightening range. So a very clear bearish break on increasing bearish volume there, but it was a nice short-term bounce opportunity for about a half an hour because those exponential moving averages became support. And then the turnaround occurred when that 20-period moving average became support clearly on a big green bullish candlestick. And no surprise that oil had a big green bullish candlestick for the same period at that time. So certainly still watching the correlation, but we are noticing a difference. It seems that the downside in oil is now reflected a lot more closely in SPY. And I was discussing with some members today, it almost seems like the algorithms have been reprogrammed to react to the downside oil move, certainly more than they have over the past 2 weeks. So we did hold the middle Bollinger Band support of 215.33, long lower wick showing that bulls buying the dip. So tomorrow we're going to be looking at the channel between middle Bollinger Band support and 10-day moving average resistance. There'll be about $1.10 in between that range. A close below the middle Bollinger Band will be bearish short term, and a close back above the 10-day moving average will be a bullish sigh of relief. So the low of tomorrow will also be a support level of 214.57. Weekly time frame is confirming the bearish reversal hanging man from last week. Now we have our lower low, and if we were to close right here and right now, that would confirm it, and we would be looking to the 10-week moving average as support. So due to the volume on this move, certainly some of it was the bulls, but the volume and the strength to the downside has me thinking this pullback is not over. Tomorrow will be very telling with regard to that, but I am looking to potentially test that 10-week moving average and perhaps the 50-day moving average over the coming week or two. So tomorrow will be very telling. If we lose the middle Bollinger Band, I'll be a lot more confident in that feeling, and we will certainly check back in after the bell tomorrow. Thanks for tuning in.